Hi, this is Randy Finney with the right side of the chart, and this is a mid-session update for Thursday, March 12th, 2020. I wanted to go over the charts real quick, tell you what I'm thinking here, what I'm seeing, some of the levels to watch, and we'll stick to the broad markets and LQD because those are the official trades. One of which was closed out today, and the other I've added two targets on. So we'll start with QQQ. The QQQ short trade, we shorted back here just about a week or so ago on this kickback rally shortly after closing out a long on a bounce trade, and originally had this first target here, a sold target at 195.35, and then as if you're in the trade, you know, I decided to extend the targets and hold out for a much larger drop, which I suspected we'd get, and so far that's been the case. So as of this morning, I did add a first and second target. There may be additional targets added to this trade, but as of now, T2 is the final target. So this T1 I added right here, slightly above that 182-ish support there, 182.21. That's pretty decent support on QQQ, and it also comes in line with a a key Fibonacci retracement. If you take the move off the lows back there from 2018, remember December 24th was a major reaction low. We come in and we're out there right now about that 61.8% Fibonacci. I don't know if you can make it out. There it is. On the left of the chart here, that dotted line comes across. So we're at the 61.8 Fib retracement, and we're there on the futures as well. So I'm going to delete that line and take a look at the futures real quick. Okay, this is NQ and the NASDAQ 100 futures, and you can see a comparable level of pretty well-defined support. You can also see Fibonacci's are here. If you can't make it, well, it's kind of overlapped with the candles, but that is the 61.8% Fibonacci retracement. Again, off that major reaction low to this major reaction high right there. That's where you want to add fibs. Now you can add fib clusters. Some people put them on other reaction lows, and the more fibs, Fibonacci retracement levels that line up, the more significant it is from that perspective. But you also have, of course, a nice price support there too, about 70. I have it about 73.50 or so. And so that's what we hit today. We bounced once off it. We're coming back to we're back testing it now, that area. And so the basis of putting a target there was the fact that we're likely to get a reaction, and we did. We had a bounce, and in fact, let's see, I think it was about 3% or more so far. Let's go back to QQQ. Here's where we opened today. There's a low right there, and we bounced as much as 4%, almost to the button right there. You can see on the pop-up box to the left, 3.99 it's showing. And we're pulling back. We're coming back in to back test those lows. So this trade's not closed out. Second target right now is at 169.70. And we'll still, for the time being, allow for potential for other targets to be added. Here's for the last over a year now, I've had what I call my next bear market target. Now we're in the next bear market, at least by that 20% drop definition. Long-term trend indicators, if we close the week down, if we don't recover, or especially if we go any lower this week, we'll have pretty much all those longer-term trend indicators will have flipped. But that's the weekly charts, and you still have the monthly charts. We have to see what happens at the end of the month. But remember, if you wait for monthly trend indicators to flip, they're not going to get you in at the top for a short trade or out of the market at the top. They're just going to help to confirm that the longer-term trend has likely shifted from bullish to bearish. So right now, again, those bear market downside targets, I don't think we're going to go straight there, but eventually work our way down. That's still about another 35% lower. And whether that happens whether it happens at all, at some point it'll happen most likely, but whether it happens in 2020 or 2021, yet to be seen, but probably 2020. Bear markets tend to fall a lot faster than the previous bull market. So again, let's just not even focus on that right now. I just wanted to kind of touch on that. Let's focus on what's going to happen today and tomorrow. That's to me most important. So here we are. Excuse me. We're a little bit below there, but you can see we have some candles that come in a little down there. And remember, I'll talk about momentum-fueled overshoots of support levels, just like this T1 zone, that former support. That former first target was set just above the 194.90 support, and you can see we undercut it a few days, even closed one day, and then had a big rally off it, and that was the support that we certainly had a reaction. I define a reaction as a bounce which we got, and or consolidation on an area. You can really consider that both. And then once the way it works is we gap down below that consolidation range, well below that support, and open the door to the next target, which we're at right now. So if you're an active trader, I think this is an objective area to cover, even though we're slightly below the support level. I'll show you some other levels to watch here. But there's a QQQ, and again, on NQ, you want to confirm it with the futures at support as well. Extremely oversold. Could the news get any more bearish? Possibly, but I'm not going to call this a selling climax, and I do think there's more downside to come in the coming weeks to months, maybe even the coming days. But I think there's a good chance we can bounce here, because I would call it, let's just call it a news climax, where you have the Trump travel ban, a 30-day restriction of all travel from Europe, the UK, into the US. You have that ban. You have the NBA, indefinitely suspending their season. This is kind of crazy stuff. Now, look, the crash potential for the market. We're kind of now getting in crash mode. We hit the circuit breakers again today with that 7% drop, 7% drop in the morning. Circuit breakers halted trading for 15 minutes. Level 2 circuit breakers kick in on a 13% decline in the S&P 500. If we get that, where they'll shut down another 15 minutes. And if we do a 20% drop, then you hit level 3 circuit breakers, which suspend trading for the day. And if it's ever going to happen, it's at times like this when the market's been caught off guard. And again, we're seeing a rapid shift in the fundamental landscape. However, with that being said, we are very oversold. The sentiment is extremely bearish right now. The VIX, you got to look at the VIX going through the roof here, and when the VIX goes high, it means the put to call ratio is soaring. People are buying a lot of puts, a lot more puts than calls, and what that does is it tends to put, if nothing else, a temporary floor in the market, sometimes a lasting floor, because it's all the effects that has when you have those put protections. Commercials, the commercial hedgers that are selling puts, they're hedging up against that. Just like an extreme low, that's where you often get these corrections from when the VIX hits extreme lows. So there are a lot of ingredients in place for a bounce. There are also ingredients in place that the market could have an outright crash if the financial system breaks. Like things I've warned about: hedge funds breaking, bank or brokerage firm breaking, blowing up, and you get these, spiraling and cascading effects of margin calls and forced selling and stuff like that. But I'm going with the bounce scenario today. I think it's probably a good shot, a good chance we bounce, and I'm doing the video right now because this is where I went long this morning, and we had a pullback, and I've added to these. I've had it, it's been a round trip trade. I'll show you the levels I'm trading off of today, and this is me. This is active trading stuff. I may be again short by the time you read this video, but let me show you some levels here on my other monitor. Or other screen here. Let me move down here. Move this box down here, and if you look in the lower left corner, the lower right hand corner, I posted this chart on the site today, right when we were coming up to here. These red lines you're looking at, and I'm sorry if these are small, I can't blow up these charts. You know what? Yes, I can. Hold on one second. Okay, there it is. This is NQ right here. This is a 2-minute chart. So this is what I actively trade off. These, I showed you a mosaic. I have 5, 15 minute, 2-minute charts, 30, 60-minute charts. And this 2-minute chart, here's last night's trading halt, which also created a support level. And so, there's trading up, covered today on those, reversed on those, that drop to support there. And that's a logical, very obvious resistance level. And you also have, and I posted this on the homepage again, a nice trend line down there off the highs right there, coming in there. So if we can power back up again, it would already acted as resistance once. It was a logical place to take some profits, cycle back in short for an active trade. And if we can power up or just sit tight if you're long, and look for a break above there, that should spur a rally, should bring in some buyers, some short covering. Otherwise, this is resistance, and we were rejected, and now we're back at support. So you got to look at it this way: a solid break below today's lows, and another move down is going to be impulsive. It will ultimately probably hit that next circuit breaker there at a 13% decline. Remember, we hit the the 3%, I'm sorry, the 7% breaker on the Qs this morning right after the open. It's really SPY that triggers it, but when that breaker is hit on the S&P 500, it halts trading in all securities on the during the regular session. So that's that. We're making another run back to support, so you can play it two ways. I can tell you the risk reward starts to get incrementally less favorable with each additional tick lower. So, hey, if you're already short in the QQQ short trade and you want to just ride out what is likely to be a much larger trend, oops, okay, I had to recenter the chart. Then more power to you. And again, just pick your stops appropriately. At some point, I'll get around to lowering the suggested stop. Certainly, I can tell you right now, if you're in this short trade, it is only prudent to lower your suggested stop. The max bounce target I'm looking at for this, or just say a possible bounce target. Let's just call it a possible bounce target, and one that I might be targeting myself, if we can break out above those levels and get some upside traction here, is back up here around where that former first target was set, just below the recent lows there. 190, we'll call it 195, but you also have some reaction lows that came in a little bit lower. That's about 192.53. If we happen to get anywhere close, there are going to be a lot of eyes on that level, a lot of sellers step in, and that's again just a potential there. We are still at the point where the markets can just crash only because this move has gone down so far so fast. The fundamental landscape continues to change. Again, the impact that a 30-day travel ban into the U.S. from Europe will have is just, I don't know, it's unprecedented. So, the market's trying to process this right now, both from a fundamental valuation perspective. Where should that put Apple and Facebook and Microsoft and Procter and Gamble? How much of an impact is it going to have on these companies? And so the market's trying to hash that out. But I can tell you this: in these sharp corrections, technical analysis is king. It takes over. Fundamentals take a while to be hashed through. Traders then flock to the technicals. So there's tremendous amount of money to be made and lost, if you're on the wrong side of the trade in this kind of volatility. But, that's why I'm pointing out these levels, and you can decide how to target those. By the way, if you're holding out for the big run, potentially more, and that 169 level there on QQQ gets taken out, set the target a little bit above. I don't see a whole lot of support. There's a little bit here. I'm going to give you another line. I had it on a different board. A little bit of support right here around 160 or so. But then you have the 2018 lows, that December 24th, 2018 low, all the way down around 143. It'd be a heck of a drop. Certainly possible to get there, but not straight there. The market's going to hit some, more halting circuit breakers on the way down. Depends on how it zigzags down there. So that's it. Aggressive traders can try to reverse with a stop probably not too far. I can tell you not too far below the lows, and try to game a bounce here if we can get some upside traction. Whereas regular swing traders can sit tight, or as I said earlier today, there is nothing wrong with being out of the market and in cash, especially if you don't know what you're doing. We've had a very nice gain on QQQ. We've had a very nice gain on LQD. We'll jump over that real quick. Decided to pull the plug on this one. This was that 116.60 support that I had on the chart recently, maybe in yesterday's video, probably one of the last couple updates. And from experience, this is no coincidence that we have, the NASDAQ futures hitting support at the same time, NDX or NQ falling to a well-defined support level at the very same time that LQD is falling to support, or fell to support, with a nice reversal so far. We took out T2. So that is part of what prompted me to, have a, target there, and to personally close out some short exposure, my short exposure on the Qs in reverse for a bounce trade here. And again, I'm going to be in and out. I may be short by the time you get this or listening to this video, or I may still be long, or I may be out. I usually like to let the dust settle. If the market's kind of stabilized today, I may just step back, sit tight and see where we go from here, because again, we've hit a lot of key support levels. If they can come in and support the market, around today's lows, they could set the stage for a bounce, or it may be just another consolidation on the way down. Again, I've talked about what happens when a massively crowded, dangerously, again, it wasn't just that LQD was a crowded trade. Apple was a crowded trade, meaning too many people love the stock, too many people are in it long, and because of that, despite their fundamentals, it's going to drop when everybody sells. Whereas LQD was a unique situation with that huge tranche of triple B rated, bottom line investment grade rated debt, which is almost certainly now being in the process or will soon be downgraded and therefore being expelled out of all these investment grade bond funds. Not just LQD, many, many, many mutual funds out there that by prospectus cannot hold junk debt. And we're holding those triple B rated bonds, and will be, and probably are doing what, the reason I shorted this in advance in anticipation of that, get out in front of it, but too late now for those that didn't get out in front of it that day. So that's that. Let's talk about SPY real quick, because be remiss to ignore the S&P 500. Ugly. It took out that 261.80-ish support. Let me see what else I have on all these other boards. Fibonacci retracement 78.6 taken out. That support there around 258 as well. So SPY is not in a good position. It's taken support, and if QQQ can't hold its support, one of two things happens. QQQ will hold this support, SPY will come back up here, hold that, and again, whether it makes a full or partial backfill the gap, that would be your potential bounce target. It's pretty big if we get it. And otherwise, if SPY cannot recover this 258 level, then there's a good shot that NQ will break, or QQQ will break as well, and follow on down. And that's about it. TLT pulled back to support. There was that big old gap, support about 158.83. We're right about there now in this uptrend line. This is a 60-minute chart. I just wanted to update that. Somebody asked about it yesterday about buying TBT, which is a short on TLT. I said, just because I thought the other day that the upside potential, the risk reward was very poor, meaning what I was saying is the upside gain potential is very, very limited, or was the other day, at least on TLT, versus the downside risk. That's a poor risk reward, and that's what happened. It dropped, 12%. However, on the flip side, that doesn't mean I think necessarily TLT is a short. And nor I said what I said yesterday in that comment was, if the markets continue lower, which is likely, that's going to help support TLT. That should be a net bullish, net bullish for TLT, and it did. It's up today. Again, I don't have much of an opinion. I don't want to be in TLT or Treasury bonds now. My thing right now today is as I speak. We're hanging on, clinging on, and I'm leaning towards another bounce. We already had a 4% bounce off this 180 level on QQQ today. That's support right here, and I think we could get another one. But the thing is, here's about trading and being wrong, because it's such an important support lever. If it breaks, it's the next dam that can break, and then when these dams break, these support levels, then it ushers in the next wave of selling down to the next support level, and even possibly beyond. But so that's it. We'll leave it there. If you're an active trader and you want to, step in, the only other thing I would say is you're going to have to use wide stops. These pullbacks in between here, even on that 4% rally off the lows today, right there, these pullbacks are in excess of 1% along the way. There's about 1.5% drop. That's probably a 1% drop right there. And then one of them turns out to be the real deal. So the point is you have to use relatively wide stops, at least 1.5%, to try to capture the, the swings in this. And there it is. So we're coming down. We're testing those lows again. And again, not good if QQQ breaks down through there. It's going to open up the door to that second target there at 169.70, at which point, unless I put a post out in advance, that will be the final target right now on this trade. I'm considering making that the final target, I should say. I sound a little confusing here, because I do have this as an open-ended trade right now to try to capture the bulk of the trend. So let me retract. Let me backpedal what I just said. That is the next target, I should say, but it's not the final target. That is the next target. If it's hit, where a reaction is likely. But if we get there and the floodgates open, it's gonna open the door to those longer term bear market targets I have down here. Potential that one at 115.35. So I'll leave this trade on for now. LQD, I had a little bit. Something told me to cover that one, reel that one in. The risk reward was not that attractive. I didn't think the downside, because they are bonds, even though they're going to be those, that the downgrading going on there. I see less downside than in the equity markets. Equities can really, really, really fall from here if we cannot hold some of these support levels soon. All right, let me wrap it up here, get it out to you guys so you can take a look at it, process it. And again, by the time you get this video, a lot of this may have changed if these levels go and we open the door to the next wave of selling. So far, kind of hanging in there by a thread on NQ right now. So there's still the chance for the buyers to step in here once more and rally it back up. And if they do, I gave you the levels to watch on that QQQ NQ 1 minute chart. Let me give it to you on QQQ real quick as well. It was effectively today's highs. You can't see it here, but that's where I had that horizontal line where the futures hit their lock limit down last night in trading. And then it showed a little better. See, with you don't have all the trades here that you have on the futures. Let me do something here. Let me see if I have the after hours trades showing. Always, there we go. That helps a little bit, but it's only going to show what happened, last night and this morning. And no, what I was looking for there is a better trend line that fit that one on NQ. Had a better fit, and I can't draw it here. All right, I'm going to wrap up here so I can get it out to you guys. And like I said, if you don't know what to do in this market, the best thing to do is stand aside, be in cash. There's nothing wrong with watching and learning, and of course, not risking big losses if this market turns against your position, whether you are thinking about going long or short. We'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Best of luck to you.